Hello, everyone, and welcome to Financial Accounting. Today, we will look into preparing the statement of retained earnings for Emily's Insurance Company. In our previous videos, we applied the integrated financial statement framework to analyze several transactions for Emily's Insurance Company. This practical approach is designed to equip you with the skills you need to handle real-world financial scenarios. We looked at Emily's initial investment in the business, notes payable, fees earned, rent expenses, auto and miscellaneous expenses, salary and interest expenses, purchasing land, and paid dividends. Remember, we have been building up to this. I have included the link to the previous videos in the playlist here and in the description below. These videos provide a step-by-step guide leading to our current task of preparing a statement of retained earnings. In the last video, we prepared the income statement. This statement is usually prepared first, as we need to know the net income or loss before we can prepare the statement of retained earnings. Next, we prepare the retained earnings statement for the months ending March 31st, year 1. Like the income statement, the heading of the retained earnings statement includes the entity's name, the statement's title, and the period of time. The retained earnings statement summarizes changes in a corporation's retained earnings for a specific period of time, such as a month or a year. Retained earnings are the portion of a corporation's net income that is retained in the business. A corporation may retain all of its net income for expanding operations or pay a portion or all of its net income as dividends. The retained earnings calculation or formula is quite simple. Beginning retained earnings, corrected for adjustments, if any, plus net income minus dividends equals ending retained earnings. Just like the statement of stockholders' equity, the statement of retained earnings is a basic reconciliation to show how you arrived at the ending retained earnings. Although this statement is not included in the 4 main general-purpose financial statements, external users consider it important as it helps to evaluate changes in the retained earnings account. This statement is often prepared before the statement of stockholders' equity because the retained earnings balance is needed for the ending equity calculation. The beginning equity balance is always listed on its own line, following by any adjustments that are made to retained earnings for prior periods. These adjustments could be caused by improper accounting methods, poor estimates, or fraud. Our example has no adjustments, since this is the first year of operations. Next, additions and subtractions are listed. Additions include net income if the company is profitable. If the company is not profitable, a net loss for the period is included in the subtractions along with any dividends to the owners. Dividends are always subtracted from retained earnings because once dividends are declared, the company owes its shareholders the funds and must take these funds out of its retained earnings, even if they are simply declared and not paid. The last line on the statement sums the total of these changes and lists the ending retained earnings balance. I have another video that discusses retained earnings in great detail. I'm posting the link here and in the description below. Let's look at Emily's transactions. The net income is $37,000, which is the difference between fees earned and expenses. The company paid $6,000 in dividends. Note that both revenue and expenses and dividends are listed under the retained earnings column, which is reported on the balance sheet. Since March is Emily's first month of operations, the beginning balance in retained earnings is $0. Net income for the month is $37,000, and dividends paid amount to $6,000. By deducting $6,000 from $37,000, the ending balance in retained earnings is determined to be $31,000. I hope you found this video helpful. Your engagement with our content is what keeps us going. So if you did, please consider subscribing, hitting that like button, and ringing the notification bell. This way, you will be the first to know when we release more videos like this. Thank you all so much for watching, and I hope to see you all again in the next video.